Hey, good afternoon, everyone. Okay, it's Tuesday. I didn't do a recording yesterday because the day just felt kind of off all the way around, and we wanted to see what the action was going to be like today. So I apologize for delaying that a day without communicating it, but sometimes you got to see it develop just a little bit more trade action before you can really have an opinion. So here's Kansas City wheat. This low scored here on the report day has now held for a full week, and so I think it's fair to say that this is a really good tradable low, and we have a spike low here today. So we've got 1, 2, 3 tests of this lower range met with buying. We have nice lower shadows. We just can't quite get any upward momentum up out of here, and that kind of makes sense if you think about it. Don't get me wrong. I don't like that we don't have momentum, but on the other hand, it makes sense given the magnitude of these lows and what a trade back above here would mean. And so what I'd like to see is wheat just explode up and out of here and attack this 772 high and then blow on up through it. That's what I want to see, and I want to see it do it on a convincing basis. Because if it does that, then I think the odds of it challenging much higher levels to the top of this range are increased dramatically. And there's a lot of reasons that I'm not going to go into on this particular video that support that, but that's what this trade action is telling us. And one of the things that we can look at to help support that are these divergences that you see. And if there's anything glaring here that you take out of this video, is that you do not want to sell a market into these divergences. It's too powerful of a potential market mover, and the downside is pretty limited. This thing would have to reverse here and come so far so fast in order to undo these divergences that it just doesn't make any sense with what's going on. Now, it doesn't make any sense to me either why we even had this move. But it's the market's job to price itself, and it's I guess our job to complain about it. But on the other hand, it's also our job to be smart about what's probably going to happen next and be prepared for it. Which everything on this chart is telling us the next most probable move is higher. Can we wait a few more days? Yes. This red 10 right here is a countdown to a what we call a DeMark sequential 13. A buy signal. You have those. You had one right in here, and a couple days later we ended up with this big rally, right? You have them occasionally. You do not have to get them. A move back above 1, 2, 3, 4. A move back above today's high at 736 will and then a series of highs above that will invalidate that and result in what we call a price flip, which would be a buy signal. So that's what we're expecting. And when we look at corn, you can see that started to materialize today. We do have a key reversal here, a nice bullish engulfing shadow. We have a full engulfing bar, and we were able to reclaim the prior lows right in here that have held through the month of August. We are able to reclaim that on a closing basis. So I think that's powerful for corn. And while corn was moving lower, look at its divergences that we have here as well. This low today scored a new low for the move and continued diverging from the June low. So from the June low forward, and remember, this is where the USDA printed a very, very high balance sheet. Okay, let me show you what that June balance sheet was, 2257, 2262. That's where we printed these balance sheets that were over $2.5 billion. So we've had several months in order to price it in, and the market is doing so on less and less volume and less conviction. You've got triple divergences from the June lows through today on RSI, stochastics, MACD, and force index. Basically, every oscillator that I know of to throw in front of you echoes the same thing. And if I turn on CD sequential here, here we have an imperfected countdown, and what we actually have is a reversal coming tomorrow. tomorrow 1, 2, 3, 4. A close above 480 tomorrow will be a price flip on sequential as well. And then obviously our hedge line is here at 487. So things are really poised for a nice move higher here. That's why we've been super reluctant to do anything more with hedging here. All we want to do is hold our simple puts, because I'd much rather have puts and have less bang for the buck to the downside and capture the move up, because I don't know if we get above 520. I don't know how high we go, but let's face it, if our corn balance sheet drops down to a 167 and the USDA holds where they are on demand, we are at a 9% carryout from 15, and that was a result in much, much higher prices. USDA is at 173.8. If you do the math and you factor in last year's corn yield from 173, and you do go through the good to excellent and the acreage, the only way you get to 173 last year is if you take out almost 2 million acres of harvestable acres. If you go apples to apples, the yield last year was 168. We are below that on good to excellent in key growing areas like Illinois and Iowa. So the USDA's got to either fudge a number, or they've got to come down on that yield, and demand will resurge like with a vengeance if this crop gets too small, because I promise you that algorithms and the fund managers and China is not naive to that little nuance that is truth in this market. So a move towards this 167, 166, 165 gets us super, super tight. And that is exactly what is consistent with a series of bullish divergences that we have here. What do you have to get lower prices with big diverging markets? You have to have the balance of the trade off balance. And so we're trying to suck people into selling this market at the low, and we do not want to be those people. Now, I don't want to be stupid either, so that's why we have puts on. So if we do collapse out of here, hey, at least we got protection on. But I think that the risk is up. I think it's a powerful argument that the risk is up, and that's where we want to stay. Now, corn, I'm more bullish than most people on corn, but that's because I buy this argument wholeheartedly that you can't have an equal yield with Illinois and Iowa as poor as they are relative to last year, and you got to have the acreage adjustments just to get back to that number. So that number's coming down. It's too high. It makes no sense. It's coming lower. Now, if we look at beans, it's even more bullish, and beans price action has been terrible the last 2 days. It makes no sense whatsoever to me, but this does make sense to me. The logic is clear here that the bean stocks to use may be as much as 30 million bushels below this, which would take it down to 220. So if our bean carryout last year was 30 million bushels less than what the USDA is currently saying, and that's coming from very sophisticated groups that have been monitoring crush numbers and export numbers. There's a lot of sophisticated analytics that goes into that number, and they don't come to that conclusion lightly based on their system and their service. So I'm not making it up, but that number is 220. If that number drops to 220 here, you can see what happens to our carryout. And if we drop it over here and we drop our yield, which by all accounts our yield is coming lower, you see this carryout flip negative. I mean, at best case scenario, we're sitting at a 5.2% carryout stocks to use. Best case scenario, we're probably somewhere between 4 and -2. Prices in beans have got to go higher in order to ration. You see energies exploding higher. I think we're just in the middle of harvest and we got a little bit of hedge pressure. I don't think that the funds are really thinking about this clearly at this point, but literally every source that we read tells us that the yield is lower than what the market is expecting, and that carryout is getting tighter, not bigger. So it's a matter of time before we price that in. So let's look at the chart, and what does it tell us? Well, it looks terrible, right? We collapsed it yesterday, or we collapsed it on Monday. I guess this is Friday. This is yesterday. Now today we have a hook reversal. We have held into this wave 2 position. This equals out to about a 1.35 A to C here. So you've got a little bit of relationship here. I don't like the action in the last 2 days. It makes no sense to me. But on the other hand, we said, hey, you can choose a low in here, or you can choose a low down in here somewhere to trade against. It's found some support. I think it's going to go higher because of everything that we believe the fundamentals to be. And anytime you have a situation where you're reading technicals and you're reading fundamentals, you're looking for alignment. And when you have a huge divide between what the fundamentals tell you that you believe that they are, and based on your knowledge and understanding and information, and what price action is doing, you have to defer to you've got to wait for those things to be in alignment. So the way you do that is you buy puts and you hold your long futures. You decide to come out of them down in here and sell time premium if you need to recover some losses. But everything in here tells me that the risk is worth it. The juice is worth the squeeze if we do blow up out of here, because you're talking, a little bit of downside risk versus dollars of upward potential because of what's going on. So if I were a farmer and I were in your shoes today, where would I be? Well, I'd probably collect my cash in my beans because it's a good number, but I would buy calls. I would be long calls anywhere from $14 to $15, or I would just buy a put and buy futures and call it a day. And then I'd go home and I'd harvest the rest of my corn and I'd get into the new year and not even worry about it because when this thing does go, I think it could explode so fast it'll make our heads spin. Now corn, I would store our corn. The market's coming down into full carry. We're into these huge divergences. The market's not really paying you to store corn today because basis has been weak. But if we get into a situation where we have a huge acreage shift, or if we have a situation where this crop is getting smaller and demand comes back in, and we get any kind of a weather issue anywhere else, then corn is going to rally, and it's going to rally in flat price, and so I would hold it. I don't think I would be in a rush to sell it. So. I'd be patient on corn. I'd be patient on beans. Wheat, I think, looks good for higher, even though I don't know what its catalyst is going to be. And really, that's all this thing is lacking, is the catalyst to push us on up in here. But remember, we've got a lot of big short positions that have been built in these markets, and they haven't gotten a lot of bang for the buck, even though it feels like a move from 490 to 475 is a big move. It's not, especially when you're looking at what a short covering rally could be significantly higher. So stick with it, stick with it, stick with it. I think the absolute wrong thing to do, and I think this with all my soul and being, is to sell this market after a 35-day sleeping period into massive bullish divergences from the June low. I think that is, I have no interest in selling that market whatsoever with my money, with your farm, with anybody's. I wouldn't sell that market just because of the technical setup. So with that, we're going to leave our puts on again, because I understand we got to manage that risk, but we are looking for long positions in these markets because of everything else that we know and we see. All right. That is what I have for you. Remember, there's always risk trading in these markets, and you should only do so in light of your own financial condition. You should trade with a professional, and remember, a day is not a trend. A day doesn't make or break a market. You got to look at it over time, and you got to look at the totality of all the circumstances. So, and then make the best decision that you can. I hope you guys have a terrific night. We'll be back with you tomorrow after we see what price action does. And yeah, I'll leave it at that. Have a great night. See ya.